So this week I was sitting down with a get-together of some of my stock club buddies, and we were talking about the AI hype train. Is AI legit? Is AI a real deal? Is this really the paradigm shift that's changing the market into a bull run or the next bull market? And honestly, one of the guys in our club brings up a really good point, and he goes, "I need you guys, if you think it's the real deal, look at these charts that I'm looking at. Let me show you this real quick." So my buddy pulls up the Dow Jones chart, right? And he goes, the Dow is price weighted. And if you look at the timing of this recording, the closing bell was May 28th of 2023. He goes, year to date, the Dow's negative for the year. So if you were holding an ETF or an index fund with just Dow Composite, you've made nothing this year. You're flat. And you came off a horrendous 2022. He goes, now let's look at the S&P. He goes, now we all understand that the S&P is market cap weighted. And year to date, you would be up 10% if you were in an S&P or a SPY fund this year, right? Well, why is it up, but the Dow isn't up? And the NASDAQ is up over 30%. So back to the S&P. So given that the weighting of the S&P is by market cap, if you eliminate the top 7 tech names that are in the S&P 500, all of a sudden, by removing those 7 stocks, the S&P is actually flat or negative year to date. So imagine that. The S&P 493 is actually negative, at best flat or up maybe 1% year to date. That 7 tech names are what are causing the S&P to be positive year to date. That to me does not make up for the ingredients of a strong, sound market. And honestly, it makes me really question, is the AI all a big hype train? Love to know your thoughts in the comments. Let me know. Thanks for watching, you guys.